You're a little bit more constructive than most. When I speak to those who are constructive on this equity market, it often involves some kind of Fed pause, some kind of Fed reversal. In Hartnett's words, no Fed until the Fed is done. What's your thought on that?
Look, I mean, our view is that once you get past that September meeting, they can not pause, but maybe shift from a 50 to a 25 basis point kind of hike rate. Look, the economy was going to be slowing this year, even if the Fed didn't hike rates, right? You had a massive pullback in fiscal spending, and you grew real GDP almost 7% in the fourth quarter of last year. So the data was going to be slowing, as we went through 2022, and at times that data has actually, looked recessionary in some pockets, and in other places looked very, very strong. So our view is not that the Fed is going to need to drive a recession to get inflation under control, because we think inflation is going to come down as the year progresses. That said, if you're of that view that they're going to need to drive a recession, then clearly you're going to be very, very worried about the earnings outlook, and you probably think there's another leg lower for equity markets. So I guess from my perspective, the economy was going to be slowing. Some of that slowing has perhaps been accelerated by Russia, Ukraine, by China, as well as by Fed tightening. But ultimately, we think inflation will come down over the summer, and that'll take some pressure off the Fed, and hopefully, as a result, take recession odds a little bit lower in the minds of investors.
Stuart, out of interest, what do you think the consensus view is right now, and how expensive do you think it is from an options perspective to have that consensus view?
I think the consensus view probably is that this is a bit of a bear market rally. We're probably trapped in a bit of a range, let's say between 3,800 and 4,200. And a lot of macro investors are going to be trying to trade that range, at least for the foreseeable future. What gets you out of that range would be probably our inflation view, coming to pass over the summer, and to the upside, and to the downside, it would be, frankly, that it doesn't happen. And it looks like the Fed needs to kind of, tighten pretty considerably. What's expensive? Look, options are generally speaking fairly expensive across the board right now. But in our view, you can own some tactical upside in the VIX to hedge yourself. And if you need to hedge, and if you're worried about that recession outlook, then I think you probably target small cap as the way to kind of hedge a slowdown in those growth risks. We think that vol looks relatively attractive, and we think that's the part of the equity market where you'll see earnings get hit first if they do.